Hey, what's going on, guys? It's Ricky with TechBud Solutions. I hope that you guys are all having an amazing Sunday. Welcome to our Sunday Stock Talk. For those that are tuning on in for the first time, I hope that you learned something new. And if so, please consider dropping a thumbs up and subscribing if you feel like we earned it. One of the things that I do want to remind you is we just created a new playlist on the YouTube channel. It's the Get Started playlist. It's a 4-part playlist, and it pretty much breaks down how you can get started in the stock market as a complete beginner. If you guys haven't checked out that playlist, it is again on the YouTube channel, so make sure you check it out. Without further ado, let's go ahead and start sharing my screen so you guys can see exactly what it is that I'm looking at. In this live stream, I pretty much just break down the top 10 stocks that our viewers see value in. So if you want to partake in this and you want me to break down your top stock, then again, in the live chat, just make sure that you share the ticker symbol of whatever stock it is that you would like me to break down. I do want to remind you that you do have to be subscribed to the YouTube channel, which is free, right? To be able to partake in that live chat. So one of the things that I quickly want to talk about while you guys share your ticker symbol in the live chat is where the NASDAQ market is at right now. So NASDAQ market based off of current support levels, you could see that based off of recent patterns, it's been showing signs of higher highs and higher lows. Market's been incredibly bullish. What's to come this week? For those that are unaware, we have the CPI data report being released on Wednesday of this week, on August 10th, 1 hour before the market opens. We're going to be live streaming it on the YouTube channel. So just make sure that you subscribe so you don't miss out. But that will pretty much determine, in my opinion, I guess it just depends what we do on Monday and Tuesday. So I'm not going to try to be biased with being too bullish or being too bearish. Right now, we are at a critical range, right, on the 4-hour time frame for QQQ, which is a 1-for-1 for NASDAQ. We're at a critical range where if we break below this moving average, this will be one of the first times that we've broken below this moving average since the rally, right? So this would be a step in the right direction if you are a bear. Now, obviously, because the market's been more bullish than bearish, it wouldn't really surprise me that it finds its support here and then it begins to recover. Because of that CPI data report, for those that are unaware, CPI data report is an inflation report, and that will better tell us, again, if inflation is going up or down, and again, what maybe the intention is from the Federal Reserve on the next FOMC meeting. So let's go ahead and just jump right into it. If you want me to break down your top stock, share it in that ticker symbol. So I guess the first one is going to be QQQ since we're already on it. One of the things that I'm going to be mainly focusing on with our LPP team is, I feel like I did a really good job last week keeping my trading very simple and simply focusing on market direction. As of last week, we were getting rejected by this EMA line on the 4-hour time frame, meaning that we did find a support level here, but when we went back up to retest, we got rejected and we sold right back off. So that's going to be the big question. As we begin to show signs of a potential support here, can we break above the EMA line on the 4-hour time frame and actually show signs of progress, or is it just going to be lower highs and lower lows? Because if I see signs of NASDAQ getting rejected, which means lower highs and lower lows, then at that point, I would be more willing to go into SQQQ than I would into TQQQ. So again, something that I'll have to follow up with, but one thing that I would really like to just do is keep my trading simple, set my alert for the break below the moving average, set my alert for the break above the EMA, and then allow direction and opportunity to present itself. Instead of me trying to be super biased of what I hope happens, just simply allow it to happen, right? Let's go ahead and move on. Let's break down Tesla. So Tesla's been hurting, right? Ever since it reported earnings, it's been dropping, testing its support level here. It is trading below the moving average now, lower highs, lower lows with this EMA. But we've seen this happen before with Tesla when it gets in this little rut of a pullback, it consolidates, and then it continues to rally if the market continues to rally. So I think a lot of tech's direction is going to be focused on how the NASDAQ market reacts to this up and coming CPI data report on Wednesday. I think Wednesday will be a pivotal moment for the overall market and better tell us, are we going to go back to retest 52-week highs on NASDAQ, or are we actually going to begin to sell off? So as of right now, we're testing a critical support range. We're not really making progress on the downside, and that's the thing that I'm always talking about with my LPP team, right? Are we making progress on the upside? Are we making progress on the downside? If we're not making progress, then that's a risky position, right? Any open position is a position that's open to risk, and if it's not making you any more money because it continues to consolidate in that same support range, then why still have it open, right? The same thing with, again, lacking progress on the upside. So I'm going to wait for direction to be more clear. If it breaks below this, then again, expect a nice little leg down. But if we do break above that moving average and that EMA, then something to look forward to see if we actually see higher highs and higher lows. So I appreciate the call out on Tesla. Let's go ahead and move on to Spotify. So Spotify actually sold off also due to earnings. We could see that it was at 52-week highs, at highs of 182, pulled on back, a lot of consolidation. I like that you're bringing this one up because can this be a dip buy opportunity, right? If it finds its support level here, can it begin to recover to previous highs? It's a 25% potential ROI. Now, one of the things that I know about Spotify is that Spotify was really struggling before it went into this really strong upward pattern, right? Or this uptrend. So looking at this on the 4-hour time frame, I'm going to be less focused if I were to be trading this myself on trying to predict the bottom and trying to get it at the cheapest price point. I think if you have enough experience in the market, you know exactly what I'm talking about, that trying to predict the bottom of a company or trying to buy it at the lowest price point is probably one of the most naive things that you can do. And more often than not, it puts you in hot water than in a good trade. So let's keep it simple, right? If you really do see opportunity in something like this, allow the opportunity to present itself, right? Wait for that proper confirmation, stay disciplined, make sure that it meets your criteria. Who cares what I say? Who cares what other people say? Just make sure that, again, all the stars align based off of how it is that you see value, and that even at worst case scenario that you manage or mitigate risk. So as of right now, right? We always ask our LPP team to ask themselves very simple questions. Are you missing out by not being invested? And no, you're not missing out on any money, right? Because as of right now, this is not indicating any signs of an uptrend. So until then, right, until a true opportunity is presenting itself, then at that point, I really don't see the point of rushing into this. Now, if this thing begins to break above EMA, break above moving average, and actually indicate signs of an uptrend, that's a different story. So let's go to move on to the next one. So Mo Gunn is asking, what about Square? Is Square's ticker still SQ? Yep. All right. So it's known as Block now. Looks like it had a 13% sell-off on Friday. Lovely sell-off. I personally don't like to buy any stocks like this that aggressively sell off unless I'm shorting it, right? It makes more sense on an active sell-off for me to just go with the flow of direction. As it's pulling on back, I would rather just short it, but now that we're approaching a potential support range, now the short's going to be a little bit too risky. With that, again, I feel like we're going to see what we saw with Spotify. This is why it's so important to look at other companies and see how they trade. You know, Spotify aggressively sold off, and then for the week that followed, it just consolidated, right? And that's kind of asking yourself that question. What's your goal? What's your intention? Do you want to buy the lows and try to sell the rips up? I mean, you can't expect this thing to recover all in one day after it reported earnings and sold off, right? It's going to take time. It doesn't mean that you can't make money on the little rips ups, and as long as you're good with your entries and your exits, is direction in your favor? Definitely not. I mean, is this considered a riskier trade? 100%. Can this thing get worse before it gets better? 100%. I mean, this is a very, very risky play. I mean, it's like looking at Spotify and trying to look back and be like, how perfect did my entries and my exits have to be every single day to end up in the green, right? So if you want to make it easier for yourself, then make it easier and don't put yourself in hot water in which you cannot tolerate. Square, as of right now, is an active sell-off. It's selling off. It can get worse before it gets better. And if you're not missing out by not being invested because it's, as of right now, not indicating signs of an uptrend, then why overcomplicate it, right? Why lose sleep over something that hasn't even happened yet? So let's go ahead and move on to the next one. Again, if you want me to break down your stock, just make sure you drop a thumbs up and subscribe to the channel. I'm going to break down about maybe 5 or 7 more different stocks. So again, if you are tuning on in and you want me to break yours down, just make sure you share it in the live chat. I don't want to take too much of your guys' time today. So LMT. Let's go ahead and break this one down very quickly. So LMT, looking at this on the day chart, it looks like we have been showing signs of higher highs and higher lows. Usually when direction is favorable like this, it could make it a little bit easier, right? Because direction, your entries don't have to be as perfect, and nor do your exits. But it looks like things have been slowing down recently. It looks like it's kind of, after it peaked at 504, we've been consolidating down here. Right now, it's still selling off. So again, trying to catch it at the cheapest price point and hoping that it recovers. So I know often if I do enter trades like this, my risk management has to be A1. And then if direction does end up being favorable, I can add to it and then lock in profits at overbought levels. But other than that, I mean, I wouldn't overcomplicate it. So let's go ahead and move on to the next one. We have Rivian, right? So Rivian Motors. Rivian, in my opinion, looks extremely overbought. When does it report earnings, or did it already report earnings? So this is August 8th. So in 2 days, it's going to be on Tuesday that Rivian Motors reports earnings. I guess we'll just have to follow up with it. But anytime a company rips up before earnings, I'm not I think Apple's a really good example of that. And Apple's a very solid company. I can't say the same thing for Rivian. But when something is being factored in before a very important report, if it doesn't completely blow the report out of water, right, then again, there could be a strong correction, and that's what we've been seeing with Apple. So because of how much this rally is being factored in right before earnings, if earnings are barely even met or barely exceed expectation, I mean, we could still expect somewhat of a correction. So I just uploaded a video over the weekend. I'm not too sure if you guys saw it. It's about the risk of playing earnings. To me, it's too risky. I would rather be someone that reacts rather than someone that tries to predict. The more times I try to force myself into a position hoping for something to happen and it never does, it's just an unfortunate scenario. So, all right, let's go ahead and move on to the next one. So, PayPal finding support. Let's go ahead and break that down. All right. I mean, not necessarily, right? So we got PayPal. It is selling off from previous highs to highs of $77, right? We're pulling on back. MACD looks oversold. RSI looks oversold. That's great. But again, indicators are to be used as a reference, never as a sole reason on why to take a trade. Let me ask everyone in the live chat. If I were to ask you about PayPal, does PayPal look like it's showing signs of a support? I mean, to me, right, if we're going to go and refer to our 3 stages of a reversal rule, right, there's the rejection, there's the consolidation, and then there's the confirmation. To me, it's still kind of in that rejection phase. We're not seeing signs of consolidation. We're not seeing signs where it begins to trade sideways, right? I think it's a little bit too early. And again, that is a little bit more on the conservative side. If you want to aggressively buy the dip, then sure, you could potentially aggressively make money as it recovers, or you can aggressively lose money as it continues to sell off. And this is why it pays to be patient, not because it's ever perfect, because most likely it's not, but at least you're more effective and efficient with your entries and your exits. I mean, it's a perfect example. If you've ever tried to buy the dip on something and it continues to dip, that's the only example that you ever need on why you shouldn't buy the dip, right? Because we all know that the cheap can always get cheaper. So again, that's just another reminder of that. So, all right, let's go ahead and move on to the next one. So SMCI. All right, higher highs, higher lows, beautiful uptrend pattern. This one's very consistent, very bullish. I mean, it looks like it meets all the criteria of an ascending uptrend pattern. My only thing with this is that now it's so overbought that I don't know if there's enough margin for the risk to reward ratio. I normally, again, if I can point out, if you were to ask me, what is the most ideal setup for you, Ricky? I love trading reversals. If you're part of my LPP team, you know exactly what I'm talking about. I love trading reversals. That's my main focus. The 3 stages of reversal, that's the strategy that I like to focus on. So, but I really do appreciate companies that are very bullish like this because it makes direction much more favorable. I would then take a little bit of a closer look, right? And when looking at this, if I were to see when would have been the most ideal time to have purchased, when this thing retraced back down, it began to consolidate and trade sideways, right? This is the rejection phase, consolidation, and then this is the confirmation stage. When we're actually indicating signs of an uptrend, there's upside potential based off of a recent pullback, and overall, it's more bullish than it is bearish. Direction is favorable, I have confirmation, and then based off of that recent pullback, I have upside margin that outweighs my downside risk. That meets my criteria for the risk to reward ratios. So I just wanted to give you an example of what I would look out for. Just because I would look out for that doesn't mean that you need to, but I'm just explaining to you on why I wouldn't buy it now. And it's just because it's too overbought, meaning the upside potential wouldn't outweigh the downside risk. So I just want to give you that example. Let's go ahead and, yeah, Rivian does have earnings, I believe, on Tuesday of this week. We just broke it down a little bit earlier. Let's go ahead and break down 2 more stocks, and then we'll call it a Sunday stock talk, okay? So Disney is going to be one more, and feel free to share it in the live chat. Make sure you guys drop a thumbs up. So is Disney a stock that I would want to trade or want to be invested in? Let me know in the live chat. What about this? What about this pattern? The lower highs, right? What about this lower high? What about this lower low? Why would I rush into something? Like, let's humanize this, right? So I want you guys to be able to use this as an example. Let's humanize this. What about this? Why would I rush into this to throw my money that I worked for into a company's performance that continues to form lower lows and lower highs? What about this is attractive? I want my money to make me money, right? So I want to put my money in something that would indicate signs of an uptrend. So why overcomplicate my trading or my investing, right? Disney, as of right now, at least for the past couple of months, right? This goes back to what? Let's look at the day chart so we can see really when this began to happen. It peaked back in 2021, and ever since then, it's been on a consistent decline. Yes, it's testing the same support. It could begin to rip up, but we have no confirmation of that. So instead of trying to find the bottom of something, why not just let's set our alerts? If you really do see potential in Disney, and because you think it's going to get cheaper and a reversal might be coming up soon, then great, set those alerts. But other than that, why overcomplicate it, right? You see potential in this, that's great. That's why you have a watch list. That's not something that I would throw money at and hope that it, all of a sudden begins to recover now that I have money in it. It's been selling off for 2 years. Come on, right? Let's not overcomplicate our trading. Let's not overcomplicate our investing. You know that you can answer this question. This is not a good stock. I mean, you are literally making it more complicated for yourself and more difficult for yourself, right? The analogy that I love to give our newer traders is imagine yourself learning how to swim in the ocean and you're doing it with the waves going against you. How much easier if you're trying to gain distance, right? If you're trying to go from the shore or from the, half a mile away from shore back to shore, right? How much easier would it be to swim back to shore if the waves are with you, right? They're pushing you towards the shore. Much more favorable. But when the waves are against you, you're just making it more challenging for yourself. That's exactly what this is. You're literally making it more challenging for you to make money by putting your money in a company that's losing money, right? And I think that's where the big disconnect is that if you're not going to focus on having any form of criteria or any form of edge when it comes down to trying to take advantage of opportunities, even if they are risky, but if you have some form of edge where every single time the risk to reward ratios are met, then great, so be it. But other than that, if you're just really hoping to get lucky, then again, this is just going to be a really tough market for you to realize that you lack discipline, right? All right, let's go ahead and move on to the last one. So, all right. MGNI. See what this is. So I can tell right away that this thing has lower volume. Yeah, broken candles. I'm going to do one more after this. I'm not a big fan of this. Just it has lower volume. It looks like all of a sudden began to gap up. I just wouldn't meet my criteria. It's not something that I would personally trade myself, but it looks like it's above EMA. It's above moving average, forming higher highs. I don't know anything about this company or why it's beginning to recover, but it looks like it has up and coming earnings coming up on the 9th. But it looks like it more often than not, big picture, sells off versus it recovering. So because of that, I don't like that overall direction is against this. So because of that, I would stay away. Let's see. Let's do, all right, Nvidia. We'll probably... All right. And then we got Nvidia here. All right. when looking at this on the 4-hour time frame, I mean, consistent higher highs and higher lows. When looking at this on the day chart, I mean, we're hitting highs of $480 a share. A lot of consolidation up here. I mean, Nvidia, to my understanding, already reported earnings, surpassed, I would say, everyone else's. Nvidia has up and coming earnings on the 23rd. So that's the next earnings from August. And I do remember the last time that it reported earnings, it gapped up, 15-20%. So we'll have to see if it continues to show signs of higher highs and higher lows beyond that. I mean, Nvidia as of right now looks unstoppable, right? Obviously, all great things must come to an end. There's going to be some form of correction at one point or another. But then at that point, it just comes down to your ability to hold yourself accountable and manage and mitigate your position size and your risk, right? I don't have much to say when it comes down to Nvidia other than it's exceeded my expectation. I feel like a lot of other people's expectation, right? When it completely blew everything out of the water and it has formed higher highs and higher lows. I think it's one of the best performing companies that's in the $1 trillion market cap for 2023. If I'm not mistaken, it is the best performing company with a $1 trillion market cap for 2023. I mean, it's seen a 330% growth within a very short period of time. So, other than that, I mean, I have nothing negative to say other than I think it's extremely overbought on the technical side. But if it continues to deliver with obviously all its talk that it has when it comes down to AI, can it continue to form higher highs and higher lows? Sure. But again, my big focus for this week, I'm taking it week by week. My big focus is the NASDAQ market and to see if we actually begin to hold above this 4-hour moving average. So I love to make money. Yep. Jam, thank you again for reminding me. I don't know if you guys saw, but in just the last week, right, I've been trading live with my LPP team every single morning. And I just closed, again, it was a $72,000 or $74,000 week. So I think I saw some of your comments talking about that all I do is trade TQs or SQs. That is correct. Most of the trades that I do take, I did short Amazon, so I do have to disclose that. But yeah, most of the trades that I do take are just TQs and SQs. I like to keep my trading very simple. And it's definitely not for everyone, right? But I have my focuses, and it's based off of the feedback that I've been getting and the people that have been tuning on in to my live sessions. We've been really enjoying it. So we always get people kind of like Jam that tune on in to like these free sessions. And this is a perfect example of why you normally don't want to be a part of a free group. And it's because people like Jam that don't make money like to talk about people that do make money, right? And in the past week, I made $74,000. In the past 2.5 weeks, I'm up 180,000, I think 186,000. If you're part of our LPP team, you've been seeing me trade live every single morning. You get to see my good days. You get to see my bad days. I'm not here to overcomplicate. I mean, I trade with over $500,000, right? Or at $500,000. I really hope that not just the way that I trade live with our LPP team, but that I also keep them up to date within our trade ideas. I've been trying to get better. I'm not perfect. I send them updates as, showing my intention for the market. My updates are never for people to copy. But I guess we'll let the people that are part of LPP share their opinions in the live chat. And all the feedback that I've been getting has been nothing but positive. I've tried to be as engaging as I can. Even with the trip that I took this weekend, we took a little last minute trip to Seattle, Washington with my family. And I'm taking it day by day. I didn't hold any position overnight. That's why I said my intention this week is to see where the NASDAQ market goes. If it's bullish and bounces off of that 4-hour moving average, I'll go in with TQQQ. If I see that rejection and lower high, lower low, and we confirm that break below the moving average, I'll go into SQQQ. And guess what? We'll continue to make money, and people like Jam will continue to talk about us making money. I think that's the beautiful thing. It's, do you want to be like Jam, or do you want to be like someone that actually makes money and does something with their life? I think that's a great way to put it. So I really do appreciate you guys' time. I hope that we're in the thumbs up. Remember, if you guys have any questions whatsoever, we have our free Get Started playlist. That's a new one that we just added to the YouTube channel. But if you want the ability to watch me trade live as soon as tomorrow, you can message me via Discord or via Instagram, and that's the first or third link in the description down below. And feel free to shoot me a message. If you're ready to join right now, we are running our biggest sale. It's $175 off. You don't have to join, but if you want the ability to watch me trade live every single day, even as soon as tomorrow, it's a one-time payment, lifetime access, and it's the second link in the description down below. So I appreciate your guys' time. I hope that earned a thumbs up. For everyone that's part of LPP or that ends up signing up for LPP this by tonight, just make sure that you watch the first 3 videos within the course, and that will show you exactly how you gain access to the LPP Discord chat and our daily live sessions. Again, if you have any questions, shoot me a direct message, and I'll see you all tomorrow at Market Open for our live session. Like always, let's make sure that we end the year on a green note.